So some introductory remarks for people who aren't familiar with Cogstate before we get started. So what Cogstate set out to do was to make the assessment of cognition or brain health as simple as possible. We wanted to make that as easy as measuring your temperature or measuring your blood pressure. The problem with assessment of cognition today is that it's quite difficult and generally handled by specialist doctors, so neuropsychologists and neurologists. We thought we could apply technology and make that much easier. We essentially do that in two different verticals. So we sell our technology. 90% of our revenue comes from the pharmaceutical drug trial market, where our customers are pharma and biotech companies looking to develop new drugs and other treatments, and we sell our technology in that setting as an endpoint in their clinical trials. We also support other aspects of or the measurement of cognition in those trials, and I'll talk about that a little bit later. The second area where we sell our technology, and in fact the original investment thesis for our business, is in the primary care physician market and the consumer market. So our original idea was that with an aging population and increasing incidence of Alzheimer's disease, doctors need a better way to be able to measure cognition, because within the context of the standard consultation, doctors don't have the time nor necessarily the training to be able to conduct that assessment of cognition. And so we thought we could use technology to enhance that assessment and help doctors answer or deal with the patient when a patient walks in and says, "Doc, I'm worried about my memory." And what does the doctor do from that point of view? And I'll dig into the aspects of both of those business units as we get through the presentation. Just a little bit more background in respect of Cogstate. We were founded in Melbourne, Australia, over 20 years ago now. We're largely a US-based company now, despite the fact that I'm currently in Australia and sound like this. 3/4 of our workforce based in the US. We have a small presence in the UK. We have a presence in Japan now, and obviously still some staff based here in Australia. So we have around 200 full-time employees, and we complement that with a global network of neuropsychologists. So these are trained clinicians working generally in private practice who complement their work within that private practice by also consulting to Cogstate. Our technology has been extremely well scientifically validated. We're working with all the top 10 pharma companies in their trials that are occurring around the world. We've been used in more than 2,000 academic and clinical research trials. More than 2 million of our tests have been administered. I'll talk about what the technology actually is in just a second. But as a company, as Ian mentioned, we're growing rapidly. We have, because of the nature of the work we do with pharma companies and other contracts that we have in place, we have long-dated contracts, which gives us earning stability. We're growing revenues, we're cash flow positive with a strong balance sheet. So a little bit about the financial performance of the company over the last 3 years. So what we're most pleased with is, as we've been able to grow revenues, I should note that all of these figures are in US dollars. As we've been able to grow revenues, we've also been able to grow profit, and we've been able to maintain that sort of and grow margins, earnings margins, as we've grown our revenue. So about $45 million of revenue for our financial year, which ended 30 June 2022, so just a few months ago, and just a little shy of $11 million of net earnings there. As we look forward in the business, we're really confident about talking about EBIT ranges in the sort of range of 20 to 24%. And in our business, EBIT is really profit before tax. There's no debt, and therefore no real interest payments in there. So in the EBIT in the range of that 20 to 24% but then as we push forward, as revenue increases, we should see those earnings margins increase, over time. And I'll talk about how we think about longer term margin expansion as we get more software revenue into our business. So just looking at what is actually the technology, what do we do? So the computerized cognitive assessments. And to understand the benefit of Cogstate technology, to some extent, you've got to understand the background of what is current, what's the alternative, which is a standard neuropsych assessment. Most neuropsych assessments are developed on the basis that there's going to be a doctor sitting opposite the patient, and I'm only going to test you once or twice. The problem when you put that into a global clinical trial is that the tests assume you're at least high school educated and speak English. If we roll out a clinical trial around the world, that's just simply not the case. The other thing is the tests aren't necessarily designed, a standard neuropsych assessment is not designed for repeated assessment, which is what you see in clinical trials. And so some of the tests you just get better at. So what we tried to do with the development of our technology was to bring standardized administration and automated scoring, which means we don't need to train neuropsychologists to conduct these assessments. This can be done by a practice nurse, by a research associate within the context of a clinical trial. The assessments are really brief and they're really easy to use, which is important. They're designed to minimise the impact of practice, and so we have a number of what we call repeat forms, so the same assessment but asked in different ways or with different stimuli, which minimises the impact of practice. They're largely free of language and cultural bias, so that we can use the same assessment around the world, but really strong scientific validation of those assessments. Our technology has been scientifically validated, showing support in more than 65 disease areas, over 600 peer-reviewed publications supporting the technology with different disease areas, different drug classes, comparison to different biomarkers and things. So, extremely well scientifically validated. In terms of then of where we're selling our technology, as I mentioned, 90% of our revenue comes from the pharmaceutical drug trial market. In that context, we're offering both technology as well as a range of services to support the conduct of clinical trials. So everything from upfront scientific consulting with respect to the design of the clinical trial and the selection of endpoints. We'll also in-license other standardized assessments of cognition, because we understand that within, say, for example, an Alzheimer's disease trial, you'll see up to 15 different cognitive assessments. So it might include Cogstate proprietary assessments, but you might include some standardized neuropsych assessments as well. So we'll manage those as well for the pharma company sponsor of the trial. We'll provide things like we'll train the site staff how to use those assessments and conduct those assessments. We'll centrally audit those, so we'll review those assessments, make sure they've been done properly. Obviously, we provide our computerized assessments. And then, and one of the things that we've been able to develop over the last couple of years is a real focus around remote administration of those assessments. So I want to spend a little bit of time just talking about that, because this is a really significant change that's occurred within the industry that's really impacted our business. So when we talk about a decentralized clinical trial, what we're talking about is taking the clinical trial experience from a research hospital and having more of it done either at the patient's home or at a local medical care facility. So we're working across a range of different diseases to support this, everything from Alzheimer's disease, mild cognitive impairment, frontal temporal dementia, Parkinson's disease, multiple sclerosis, post-traumatic stress disorder, oncology, cardiovascular disorders, and a range of rare diseases. So a huge range of diseases where we're currently working in remote clinical trials, where, as well as our computerized assessments, we're supporting a range of other assessments, and I've listed some there in terms of the types of tests that we're conducting via a telehealth style assessment, using our consulting neuropsychologists who are acting as the doctor on the other side of the screen, as it were, in the telehealth assessment, or our computerized assessments. And we're doing that across a range of countries around the world in the context of these clinical trials. As you can probably imagine, the use of our computerized assessments within this context, because they're easy to use, because they're digital and designed to be administered by the computer, there's a huge amount of benefit to those assessments within this context. It's probably also important to understand that the move to more what we call decentralized clinical trials was occurring in 2018, 2019, but really has accelerated substantially, as we went through COVID and as we've seen the adoption of different technologies like what we're doing here today, and this virtual type assessment or virtual type interactions. As we've seen that adoption, we've seen that translate into clinical trials as well. In terms of what that means with respect to the conduct of the clinical trial, so you're seeing a lot of things like what we call centralized assessment. So rather than training doctors all around the world to conduct these assessments in exactly the same way, what we've got is a smaller group of trained doctors administering these assessments remotely. And because we're using fewer doctors, you're seeing lower training and monitoring costs and better use of those scarce resources. You're seeing more consistent administration. We're seeing that the clinical trials themselves are faster to recruit because we have we can recruit from a larger geographic area and find patients. In doing that, we're also finding a more diverse patient population, which is something that the regulators, particularly the FDA, has been pushing really hard in respect of, that we see more diverse patient populations in clinical trials. From a Cogstate perspective, because we're providing more of these services, Cogstate is earning a greater share of clinical trial budget. So we're seeing our average contract size increase. I want to shift gears a little bit and talk about what we're doing in the healthcare space, or that primary care physician space. And the important thing to understand there is the agreement, the global license agreement that we've executed with Japanese pharmaceutical company Eisai. So for those who don't know, Eisai, large pharmaceutical company with a long background in Alzheimer's disease. The most common symptomatic treatment of Alzheimer's disease to this day is a drug called Aricept that was launched by Eisai back in 1997. So they've got a long history in Alzheimer's disease R&D and Alzheimer's disease therapeutics. Eisai also have their own drugs going through development at the moment. So we've entered into two license agreements with Eisai, one in respect of Japan and one in respect to the rest of the world. It completely excludes our clinical trials business, but relates to this primary care physician business. We've received the financial terms of that agreement was we received an upfront payment of $16 million that was received in 2020. And then additionally, Cogstate will receive a double-digit royalty on all revenue that Eisai generate from the sale of our technology over the course of the next 10 years. That royalty can't be worth less than an additional $30 million. So minimum payments under the agreement are $46 million US. In addition, Eisai will fund all additional development, regulatory and commercial activities that we need to do. So from Cogstate's perspective, it's really just license fees in respect to that royalty payment with very low costs. And then all data that's generated will be jointly owned by Cogstate. So that's a really exciting advancement for us. And I'll come back to what's happening in the world of Alzheimer's disease a little bit later in the presentation. Some financial highlights for the year ended 30 June 2022. So when we sell to a pharmaceutical company, we sign a contract at the beginning of the trial, and that details the scope of work, so exactly what we're going to do and the amount that Cogstate will be paid for that technology and services. So those sales contracts that we enter into are really a leading indicator. The revenue then rolls off over a period of time as the trial progresses. So $82.5 million US of sales contracts executed for the year to June 22, which is up 74% on the prior year. At the end of June, we had $139 million worth of revenue under contract that will roll off in future periods. We recorded $45 million of revenue, as I mentioned earlier, that was up 38%, and a little shy of $11 million of profit before tax. Really strong operating cash flows, $9 million operating cash flow for the year. We finished the year with a little shy of $30 million net cash. We have no debt on our balance sheet. So I wanted to then spend the time I've got left talking about what the factors that are impacting our business as we look forward. There's a couple of really important things. The first is the amount of Alzheimer's disease R&D that's ongoing has really increased over the last couple of years, and we're seeing that impact on our business. I talked about the $82 million worth of sales contracts we've executed for the year to 30 June 22. Approximately 80% of that was in the area of Alzheimer's disease. So this is a really important factor that's driving our business. The other factor that's really important has been this virtual assessment of the decentralized clinical trials. Substantial amounts of our contracts, have that virtual assessment component in the trials. And in fact, what I would suggest is when we see new protocols for clinical trials now, very rarely do we see one that doesn't at least include some aspect of virtual assessment or virtual monitoring through the conduct of the clinical trial. The final piece that's really, I think, really important and interesting to talk about is the work we're doing with what we're calling channel partners. So these are companies who work in the clinical trial services space and who are selling generally technology into those clinical trials. Broadly speaking, these are electronic data capture systems where all the data from the clinical trial is captured and stored and then analysed. So the most public is which is the partnership we entered into with a company called Clario. We entered into that a little while ago now, but we're seeing really good success with integrating our technology into their offering and being able to co-sell or co-market our technologies as these other eCOA companies try to push into central nervous system disease trials. So we think that's going to be a really important way of how we sell going forward. Just finally, I think important to talk about some of the important phase 3 Alzheimer's disease trial data that's coming out over the course of the next 12 months. Eisai's drug lecanemab is actually due for top-line data release at the end of this month. We anxiously, I suppose, await the results of that Clarity AD study. Similarly, Roche has some data due out at the end of this calendar year, and then Lilly's drug donanemab due for a top-line data release in mid-2023. From our perspective, success in respect of any of these potential therapeutics would be really important for our business. We believe that, look, excluding these specific drugs, if we look over the next 5 to 10 years, our hypothesis is that Alzheimer's disease R&D is where oncology was in the 80s, and that we're really just starting to understand the disease and separate different genetic factors and different types of disease and get a much better understanding of the disease. So as we look over the next 5, 10, 20 years, we believe the level of R&D investment is just going to increase dramatically. The industry analysis will suggest that central nervous system disease trials are expected to rival oncology in terms of the amount of R&D spend over the course of the next 10 years. And we think this forms a key part of that. So longer term, the trend in terms of R&D spend is up and to the right. But should one of these drugs prove to be successful, we believe that we'll see a short-term or almost immediate pickup in level of sales activities or level of R&D activity in clinical trials, and we think that benefits us. We benefit from the all boats rising on the rising tide, and to the extent then that we can increase our market share, we think that's really substantial. The other aspect that's really important to understand is that in terms of what we call our healthcare business, or the sale of our technology to consumers and primary care physicians, really that opportunity from a commercial perspective only becomes real once we have Alzheimer's disease drugs available on market and reimbursed. We think at that point we begin to see a pickup in the level of assessment that is occurring at primary care physician level in terms of cognition. And so we think that's so to summarise, I suppose, that positive drug readout from any of these trials would really positively impact our business as we look forward. with that, I think I'm already a little bit over time. So, Ian, I'm going to pause there and see if there's any questions.
Yes. What intellectual property do you have?
Yeah, it's a good question. The sort of what is the moat around what we're doing? Look, so patent protection in the area of software is really difficult. So really, the moat protection for us is more around the scientific validation of the data and the technology than it is patent or IP protection. So really, it's the time that would take for someone else to develop these assessments, get them scientifically validated. And if you think about it logically, if you're going to claim that your technology can measure cognition accurately and can monitor changes in brain health as someone with Alzheimer's disease progresses, logically you have to follow that patient and prove that that is true. So, we think the sort of moat to produce a competitive product is somewhere in the order of, sort of 7 to 12 years by the time you get the amount of validating clinical evidence, certainly, to rival the amount that we've got of, more than 600 peer-reviewed publications, as I mentioned.
How big is the potential for diseases other than Alzheimer's, and to what extent are you actually working on those?
Yeah, no, it's a good question. So we talk a lot about Alzheimer's disease because the trials are so big and so the revenue opportunity is so big. So we're currently working in 123 clinical trials. 34 of those are Alzheimer's disease trials. So if you look at it in terms of number of trials, it's actually a relatively small proportion. It's just that they're really large trials. So the largest trial we're working on is a 3,500 person trial of preclinical Alzheimer's disease that's going to run for 8 years. Has a budget of more than, so Cogstate contract value of more than $30 million for that trial. So small number of trials, but they're so large and the revenue opportunity is so large that from a financial impact, they're disproportionate in terms of our results. So, continuing to work across a range of different diseases over the course of the next year, we see really important growth in particularly rare disease areas as well as Parkinson's disease. They're two areas where we're particularly focused at the moment, as well as some of the psychiatric areas. Depression, major depressive disorder, we're seeing a lot of pickup there as well. So certainly working across a range of different areas. It's just the Alzheimer's trials are so big.
Okay, is there a sample on the web for your cognitive assessment?
You can go to our website and you can look. You can see what they look like. It's not necessarily an interactive assessment where you can do it yourself, but it's certainly videos of the assessments, and you can see what they look like and see how patients interact with them.
For long-term growth, is increased R&D spend or taking share from paper and pencil tests the primary driver?
Yeah, it absolutely is. So in terms of R&D spend, I mean, we are a software company, and so there's a degree of continued investment that's necessary to keep our technology at the cutting edge and to keep advancing it. So we will do that. But absolutely, in terms of gaining market share, it's really about, taking assessment from those standardized paper and pencil tests. So when we look at, so in the context of clinical trials, that's really our competition. We don't see other digital assessments in the same Alzheimer's disease phase 2 and 3 trials as we're in. Largely speaking, the competition there is a standardized paper and pencil test. In terms of that market share, we in our financial year-end reporting, we reported our assessment of Alzheimer's disease market share roughly around 17%, which is up from about 13.5% sort of 6 months earlier. Around 20% market share in the context of phase 2 Alzheimer's disease trials. So we see that we're getting good growth there, but really the question for our exec team is how do we take that market share we have now and grow that to 30% and beyond. And our belief is if we can do that in a market that we expect to grow, then there's substantial revenue opportunities for us.
What's the breakdown of revenue in clinical trials between administering standard tests digitally and selling Cogstate specific digital assessments?
Yeah, so how we break that down is really looking at license fees versus service fees. And service fees ends up being a really broad assessment because that includes both our consulting neuropsychologists who provide an assessment, as well as the data managers, project managers, and those kind of things that support all of the conduct of the clinical trials. So license fees on any clinical trial can range between about 17% at the lowest to about 23%. But that's a range generally for license fees, and the rest tends to be service fees. In terms of margins on that different work, so the license fee revenue for all intents and purposes is basically 100% margin because the costs have already been expensed over the years in terms of the development of that technology. When we look at that physician assessment, those telehealth style assessments, even though that services revenue is still highly profitable services revenue. So we're doing that at about 71 points of margin, which is really good work. And then when you get to the data management, statisticians, that kind of body shop type work, it's more about a sort of 56% margin. So as that sort of blends, we've been looking at about 60% gross margins in that clinical trials business.
Are there other complementary services or technologies that you can provide your customers to get even more wallet share of these clinical trials that you aren't doing currently? Are there certain other areas that you're working on?
Look, I think as a general statement, what we're trying to do as we look forward is to get more license fee revenue as a percentage of total revenue, for all of the obvious reasons. One of the things we're really interested in is, now that there's so much virtual assessment going on and these telehealth assessments are being recorded, we want to look at the ability to use natural language processing to analyse those assessments and to find errors quicker. There's a lot of money that's spent on individuals literally watching a recording looking for error, and we think we can bring technology advancements to improve that, which means lower costs. From a sponsor point of view, lower cost, much quicker analysis, but from our point of view, an increase in license fees and improved margins over that. So we're looking at those kind of areas.
You mentioned Clario, who's a big strategic partner of yours. I think they do north of $2 billion in revenue. And I was reading an article. I think the new CEO that came on board said that central nervous system disease is kind of one of the top two areas they're looking to enter and take advantage of over the next few years. Can you kind of talk a little bit about how you fit into that vision for that larger company?
Yeah. So really good company, Clario. As you mentioned, Chris Vickery took over as CEO on the 1st of July. I had the opportunity to spend half a day with him a few weeks ago, just introducing ourselves, and really he's still getting his feet under the desk. So, really talking to him about how our two companies are working together. But certainly his focus area is around oncology and central nervous system diseases. A company that's really a pure technology play in the context of clinical trials, the conduct of central nervous system disease trials is quite different to other trials in that the assessments have peculiarities around them and require some scientific input just to adjust the technology for the way that those different assessments work. The reality is that within companies like Clario and most of the other sort of eCOA providers, they don't have that scientific services part of their business. They've just not needed to. And so what we're doing there is two things. One, we're embedding our technology within there. So in the context of selling their technology, they're also selling the ability to offer digital cognitive assessment. That's logical and relatively quite easy. We integrate our technology into theirs via an API. The front-end stuff's really quite easy. The back-end stuff gets a little bit more difficult because everyone's database has their own peculiarities. So you've got to manage that a little bit. But then the other aspect is really just the scientific consulting and the advice around the construct of their technology specific to each individual trial. So, I think we're becoming, a really important strategic partner for Clario and for other eCOA providers. I mean, we're co-bidding at the moment with 5 different providers, where we're working with, in hand, which each of those to co-market and co-bid in respect of clinical trials. And as I mentioned in the presentation, our view is that's a really important aspect of how do we grow market share. To some extent, I mean, and selling in this area is more complex than the more shots on goal you have, the more wins you get, but it's still selling, right? So just shots on goal is important. I mean, it's hard to win a trial that you never bid for. And from our perspective, we have 4 business development directors. Clario has 125. And it's just a different scale. When we talk about, what customer crossover there is between us and them, essentially they're working with the whole industry. We're not. And so one of the things that I think everyone has seen through COVID is the way that you sell is different now, in that you can't just go and visit people and go and pop into their office and, and talk about your offering, because they're not in their office. You can go there, but you'll be on your own. And so the question becomes, how do you establish deep relationships that allows you to see opportunities before they go to competitive bid? Because that's the ideal situation. You want to sell in an ideal world non-competitively. And so one of the focus areas for us is to partner with people who already have those relationships and to leverage off those. And and I think we're seeing success with that.
You mentioned 2 kind of interesting KPIs. It's about just bidding on more deals, and then increasing your percentage of wins. So how would you say, if you're giving yourself an A to F grade, over the last 12 months, how do you think you're progressing in that regard?
Certainly seeing a lot more opportunities. There's no doubt about that, and that's just working with more partners. We're seeing more opportunities. So I think that's good in terms of success rates. In terms of wins, what we see is that if we can get involved and get our scientists in there consulting early before protocols are finalised, that's where we really see good success. So where we can do that, so that the rough rule of thumb is if we can win a scientific consulting agreement, right? So a standalone, generally small contract, it might be $10,000, $20,000, $30,000 of scientific consulting. Where we win that, we have about a 75% success rate in terms of getting our technology embedded into the trial. When a finished protocol comes to us and we're just bidding on it competitively, we win about a third of those. So there's a big difference between a third and 33% and 75%. So getting that scientific consulting in there is a really critical aspect of how do we win more work. And so that's where we're investing. Given that we can leverage off other people's business development teams, we're not spending incrementally more across that. We're trying to leverage there. But where we are spending more, where we're investing, is that science pool, that what we refer to as is technical sales. Because it's still sales. You're still out there talking about how you solve a customer's problem, but they have to be a scientist who can understand which tests we should be using, what are the advantages in this trial design with this patient population, and how do we manage that to get the best outcome for the sponsor. Because what they're trying to do, of course, is clinical trials are exercise in statistics, as much as we don't want to think of them like that. It's all signal over noise, right? So the signal is what is the best test to use in this circumstance, but the noise is it going to be administered in exactly the same way and get me consistent data in China, Russia, Australia, US, UK, right? Because we have to be able to do that in the context of a global clinical trial. So choosing the right assessment and the right endpoint is just as important as having a good drug.
Is it wrong to think that if you're involved in a phase 1 trial or a phase 2 trial with a drug that you would also be included then in the phase 3? Is that the wrong way to think of it?
No, not at all. So it doesn't. Phase 1 is a little bit different. The safety studies and the endpoints you use, and that is a little bit different. But certainly from a phase 2 to a phase 3, very rarely would you see a successful phase 2 then switch out providers. So that it works from our point of view. It also means it's something can be really quite difficult to get into a phase 3 program if you weren't in the phase 2. So it works both ways.
Yeah, and I appreciate the color on that. What proportion of Eisai's Alzheimer's trials do you work on currently? And would you expect to do work on a majority of the new trials Eisai would initiate if lecanemab is successful?
It's a really good, intelligent question. So our relationship with Eisai isn't as long as it is with, say, our relationship with Eli Lilly. And therefore, without getting into specifics, if you look at the initiation date of different trials, you'll be able to work out, which trials we're working on and which trials we're not working on. So I would suggest that our proportion of Eisai trials at the moment is actually quite low. I mean, they're a significant customer for us, but if you look at the significant amount of work that they've done in Alzheimer's disease, we haven't supported a lot of that. As we push forward, we would like to think, given the nature of our relationship and the strong relationship we have, and we'd like to think that they would want to include our assessments in their clinical trials, especially within the context of, as when you're in phase 3 trials, the commercial team starts to have an interest and input into the design of trials. And one of the logical questions is, if this works, how are doctors going to prescribe this drug? So what tests are they going to use to determine that someone should benefit from this drug? In the context of Eisai selling and marketing our assessments to primary care doctors, we would like to see that crossover into their clinical trials. But that's not a given. We've still got to work through.
Yeah. We had a question come in. You mentioned a 30% win rate when you don't start off with kind of a scientific smaller contract to help them organize the trial. So the 30%, in that scenario where you'd have a 30% win rate, who's winning that 70%?
Yeah, good question. So generally we have these two major competitors we pitch against. One's called Signet Health. The other is Medavante Prophase, which is part of the WCG group. So both WCG and Signet are PE-owned companies out of the US. They offer a broad range of services, including the assessment of cognition and using those standardized assessments. They also offer their own ECOA offering. So good, successful companies that we're pitching against there.
Okay. Last question we have is, in the future, do you think buybacks, dividends, neither, keep your cash balance large so you can take advantage of things?
Yeah, it's a good question. I think as we push forward, say over the course of the next 12 months, I think we're going to have to make a decision on that. So, with 30 million net cash now, you project forward 12 months, it'll be, even higher than that. In the absence of, some kind of acquisition or some kind of strategic build of different technology, I think we would look at something like a buyback. I mean, I was listening to the previous presentation and noting the similar issues there of, I think she talked about 40 million of cash and a stock price that's, not where they would like it to be. We're in a very similar position. And so a buyback within that context, even if it acts to just put a floor under the price, has some merit to it. Part of the issue that we have is we're so tightly held. The top 20 shareholders own 80% of our stock. So part of the concern we have is with a buyback, does it become so thinly traded and so tightly held that it's almost not investment grade? Right? That we have to trade those two things off against each other. But the cash we've got on our balance sheet and the current prices, it's been a topic for discussion. I mean, it was a topic for discussion 6-12 months ago, and with the pullback we've seen in our price, it becomes, from our own company point of view, becomes more compelling that that's actually a good use of our cash and a good way to improve return for shareholders. But look, we think, our general assessment is that we think that share price normalises. Certainly impacted at the moment by the upcoming data release from ASI and some fear in the market, as much as anything, as to whether that could be negative and what impact does that have on our business. So look, we'll wait and see how that plays out. We don't think that's going to be as bad as obviously what the market is thinking. As I said, we project growing revenues, profits and cash flow over the course of the next 12 months. But there are some other sort of opportunities. I talked about that, the sort of investment around technology and the opportunity for machine learning in terms of error detection in telehealth style assessments and things. So we're just going to balance a few of those things over the course of the next 12 months. But in the absence of anything else, I think this time next year we probably have to look at what we're doing with that cash.